What's up, guys? Welcome to the channel. It's been almost a week since our last Bitcoin video. During that time, we discussed why Bitcoin needs to enter a bull run over the next 12 to 24 months to stay relevant in the long term. Fast forward just 1 week and Bitcoin is now up 5.6% as we inch closer and closer to its third halving event. In a mere 17 days, the supply of all new Bitcoin minted per block will be cut in half, and if the demand for the asset stays constant, this should lead to a price increase all by itself. But we're actually not going to focus on the halving right now. In fact, the information I'm going to share with you in this video has nothing to do with the upcoming halving, which is bullish in its own right. This information is based solely on technical indicators and macroeconomics. But before we get into it, I want to thank all our new and returning subscribers for your support and explain what we do here for you if it's your first time watching. This channel exists to help you responsibly navigate the unpredictable world of cryptocurrency through news videos, technical analysis videos, and crypto project reviews. If you're passionate about incorporating cryptocurrency into your overall wealth building strategy, then go ahead and subscribe to our channel in the bottom right corner of your screen and activate that bell notification to stay connected. All right, let's get into it. While I was researching this video, I stumbled onto this article on CoinDesk. So, first mover, Bitcoin catches the almighty dollar even during 2020's dash for cash. And what I want to talk to you about is Bitcoin's performance as a currency as it compares to other currencies around the world. So if Bitcoin were a government-issued cryptocurrency, it would be one of the world's top performers, beating not only popular emerging market tenders like the Mexican peso and South Africa's rand, but also advanced nation stalwarts like the euro, British pound, and the Canadian dollar. So how well is it doing exactly? Let's take a look at this chart. Here's the year-to-date return of currencies against the dollar. So every one of these percentages is how something is faring against the dollar. So you see all these different currencies here down 26, 25, 20%. Most of them, a vast majority of them, are down against the US dollar. And that makes sense because the US dollar, if you didn't know, is the world reserve currency. And even though we are printing it by the trillions right now to prop up the stock market and the economy in the US, it is still nonetheless doing very well, at least for the time being. But if you look at BTC right here, you can see it's only down 1% against the biggest currency in the world. And this data was collected as of April 22nd. And of course, Bitcoin has had a big day today, so it might even be outperforming the dollar by the time you watch this video. As you can see on this chart here, Bitcoin is up 2.7 as compared to the euro as well, and it's beating the euro during a year that the International Monetary Fund predicts will see the world's worst recession at least since the 1930s. And if the coronavirus pandemic lasts beyond the next 2 or 3 months, we could even enter a depression here and be looking at something even worse. So this speaks volumes for Bitcoin. So if we are moving forward and moving into a potential recession, which we are definitely going towards, and maybe even a depression in a worst case scenario, what you would expect to see are hard assets like gold and Bitcoin outperform as fiat currencies get depreciated. And this quote is from the co-founder of the cryptocurrency analysis firm Digital Asset Research. He goes on, think about it this way. Dollars have been in such high demand from investors lately, businesses, governments, central banks around the world, that the Federal Reserve has had to inject more than $2 trillion of new money into financial markets just to preserve the stability. So at the moment, what that means is the US government and the Federal Reserve is printing money at a record-breaking pace and increasing our national and international debt as a country. Now, this could lead, and it remains to be seen, but it should theoretically lead, it'll be one of the factors that lead to inflation over time. So what happens when inflation occurs? It means the US dollar is going to be worth less. You're going to have less buying power with it. And if that happens to the US dollar, which is a very strong possibility, we have to see what Bitcoin does and how it reacts in the long term. But this act of printing trillions of dollars is a short-term fix that may have long-term repercussions. And one of the Fed's motivations for the massive money injections is ultimately just monetary policy. The US central bank is trying to counteract the powerful deflationary forces of an economic contraction. Because right now, without all this money being printed, the dollar is deflationary, meaning that we actually have more purchasing power. Like if you think about the prices of oil, like I filled up my car the other day for about $20. I haven't paid that little to fill up my tank of gas in God knows how long. So, you know, it's a really interesting thing, but the government is stepping in and intervening it. And guess what? Nothing stepped in to intervene with Bitcoin. Its performance is natural and it's true. And that's because it's decentralized and it wasn't created by the government. So whatever's happening in Bitcoin is happening without the assistance of the Federal Reserve. So that's one reason I'm bullish on Bitcoin, not only now, but potentially in the future. You need to think beyond the next couple days and weeks and think months and years. But let's take a quick look at the technicals here. And I want to show you what just happened today. And this is really bullish. We did close above that critical level of resistance, which was right here, which I had marked on my chart at $7,460. We closed above that, and now we are sitting here around $7,500 at the time of this recording. We are well above the 50-day moving average, which is bullish, and I want to point out here, if you see this yellow triangle, the last time we had a powerful green candle that went through the middle of what we call here a parallel channel, we saw a doji candle, and then we saw it rise all the way to the top of the parallel channel that we're looking at. So right now, as you can see, as we talk about this parallel channel, we were in the bottom of it, and now we are kind of rising, and we're right in the middle. If we can manage to get above here, the next serious level of resistance you can count on is $7,964. So even before $8,000, but if we get all the way to the top up there, we could be looking at an $8,138 Bitcoin sometime within the next few weeks. I also want to show you, as promised, a few other indicators. You can see that the Bollinger Bands are relatively tight right now as compared to how wide they've been in the past. This is on the weekly time frame, I should mention. Before we were looking at the daily. Now we've switched to the weekly, and we are right in the middle of the Bollinger Bands, which suggests we have room to move up. If you look at the RSI, we are only at 47. And if you know anything about RSI, you know we can go up to 70, and Bitcoin is known to extend even beyond that, as you can see over here, 79, before we are overbought. So there is room to go up, which is what I'm telling you, which makes sense because there's also room to climb in the parallel channel. Another thing to keep an eye on, and I'll definitely keep you informed about this if it crosses over on this channel, is we are coming to a point where our moving average convergence divergence, or our MACD, is coming to a point where the blue line crosses over the red line. And if that happens, we will turn bullish. Historically, Bitcoin reacts relatively well, not perfect, but relatively well to the MACD crossovers. And this would be a big one on the weekly chart. Now, this is a lagging indicator, so obviously we did turn bullish a few days ago, but it's going to take some time before you can see that on the histogram here. So I will let you know when we cross over. If we do, that will be a really big buy signal and potentially something that kicks off this bull run. So all in all, what I'm saying to you, and since our last video, we've got the fundamental news, of course, which we knew was coming, which was the halving. We got that coming in 17 days. We've got some good news and some really nice performance as Bitcoin compares to other currencies around the world. And we have some potentially really bullish technical indicators that are just on the cusp of coming into fruition. So there's a lot to be excited about. There's a lot to watch in cryptocurrency, and you need to watch closely. Subscribe to my channel, and I'll do what I can to help you stay in the loop. Also, like this video if you found value in it. As someone who always preaches responsibility and safe investing, I want to remind you to never invest more than you can afford to lose in cryptocurrency, and to enjoy the ride while it's happening. This is potentially going to be a really exciting bull run, and we are just at the beginning of it. We're just starting to potentially get into this. So stay tuned, and I'll see you guys next time.